Andre, it's great to have you with us. Of course, AES, an independent power producer. This conflict has really brought up so many issues of energy interdependence, renewable energy strategies, maybe underinvestment in fossil fuels, and even recommissioning of nuclear plants, right? So for you, what are the main takeaways from this conflict and what it's going to mean for your business and for the energy sector?
Well, Mike, thank you for having me. I would say that first we have to distinguish between short-term and longer-term. So in the shorter term, there's a significant amount of disruption. I think that certainly U.S. energy producers are in a favorable situation. Henry Hub gas prices remain around the $4 per million BTU range, unlike international gas prices, especially in Europe. So folks like us who are basically using Henry Hub, whether it be for LNG or domestic consumption, have not seen that much of a change. Then if you think of renewables, there's considerable upside for the renewables that are already installed. Now, going forward, I think if this is a permanent change, in other words, if people think this is going to last more than 5 years, then you're going to see, I think, an acceleration of investment in renewables. So while there's very unfortunately, significant disruption in Europe, which depends for 30% of its gas imports from Russia, I think the situation is somewhat different in the electricity sector here in the U.S.
I guess I'm trying to figure out your take, because isn't the big realization here that because Europe was so focused and intent on making its economy green and relying less on fossil fuels, that it became so dependent on Russia for oil and gas and coal, and that was a miscalculation as far as climate goes?
Well, I think that we can use the case of Germany of what not to do in terms of its energy policy, because first, following Fukushima, they decided to accelerate the shutdown of their nuclear plants. Now, planning the transition is very important. You can't build renewables overnight. So what happened is after shutting down some nukes, they actually had to build some more coal plants. Then they did not build LNG terminals, and so they were very dependent on Russian gas. And truthfully, from an ecological point of view, bringing in gas over, 8 time zones on Soviet-era gas pipelines, which are quite leaky, is not the same thing as, very responsible producers in the U.S. Now, with renewables, there has been some talk that this year that it was less windy in Europe than expected. But I think, renewables have proven themselves out. Right now, the cheapest energy, is from renewables. Now, there's the difference between energy and capacity. Capacity is the ability to provide energy 24/7. And that's really where energy storage comes in. And we just don't have enough capacity right now for installed lithium-ion batteries to really make renewables around the clock. Although AES is really a leader in that. We have done some of the first truly 24/7 renewable contracts with some of the big technology companies by using energy storage and a combination of renewables.
Mm-hmm. As everyone is, of course, focused on trying to minimize total cost of energy with what's going on with fossil fuels, there has been some talk, though, that renewables are seeing cost increases because of other commodities or product shortages, things like that. What does that mean for the kind of break-even levels for some of these renewable strategies?
Yeah. Well, again, it depends. If renewables are competing with gas, they're more competitive than they were before. Now, the problem has been that renewables haven't been 24/7. So you need gas or coal to provide, or hydro to provide the base load. Now, there has been some inflation on solar panels. The price had been dropping very quickly. Some of that was driven, quite frankly, by the trade issues with China. The use of forced labor in Western China to produce polysilicon. So what we've seen is the supply chain very much move away from China. So, for example, AES, all of our solar panels that we're importing are coming from outside of China. And all the polysilicon that they use by mid of this year will be coming from Germany and eventually from Korea. So we've been able to move that supply chain off. Now, given that a lot of corporations have decided to have green targets and move into green, we're not seeing it that price sensitive for some of these longer term contracts.